Welcome to the Tesla Economist. Please hit the thumbs up and don't forget to subscribe. Credibility. What's that? What does that mean when it comes to investing? Is there someone out there you can simply listen to and they're always going to be right? What gives them credibility? Their track record? Through my Tesla investment career alone, I've been dealing with the likes of Jim Chanos, the infamous Enron shorter, who was continually on CNBC reassuring us that the competition is on the way and they will destroy Tesla. I had to go against nearly a century of history of auto startups failing and still bet against those statistics. Like the Tucker 48 back in the 40s, a revolutionary new car design that was significantly better than Chrysler, Ford and GM. If I recall, this was actually the car that first introduced seatbelts, along with other features like adaptive headlights. It was a superior car. The big three did everything they could to take them down, and succeeded. And that was over 70 years ago, when the barriers to entry weren't anything like they are today. We had all these successful short sellers betting against Tesla, again like David Einhorn. I'd even read his book. These are smart people, yet I thought I knew better than all of them somehow. I mean, it seemed so obvious to me that Tesla was going to be such a huge success. They'd created such a nice EV that actually had a decent range, and this was the Model S. Someone had achieved what many thought was impossible. When Tesla started dipping below $200 a share, pre-split price, $40 equivalent today, despite losing a reasonable amount of money, I was also stressed that I was going to miss out on Tesla, although I was invested, because it was obvious that the likes of Google or Apple were simply going to buy Tesla out, with Tesla's market cap sitting at around only $30 billion. It was a bargain. I was just waiting for the announcement. And at this stage, Tesla already got past production hell, another stressful time. But it never happened. Larry Ellison, the Oracle founder, made a $1 billion investment, and he is now worth in excess of $100 billion, partly attributed to that. But there was no takeover. It was reassuring at the time that Larry Ellison had faith enough in his friend Elon Musk to invest $1 billion. Back then, there wasn't the kind of support you get these days. There weren't YouTubers doing independent research on Tesla for a living, trying to keep you in perspective of the FUD. Tesla was still a joke to the competition, with the minute number of sales they delivered, pale in comparison to a giant like Ford. And then we even heard later that Elon actually tried to contact Tim Cook to sell Tesla, but he didn't even want to meet up with Elon. Thank God. But surely Tim Cook and his massive empire of technologists, engineers, and business advisors would have considered purchasing Tesla. You'd think they have the credibility. But no, they clearly didn't have the vision. And now they're struggling to find a way to make their own EV, which doesn't appear to be happening. Perhaps they'll wait for some of these ICE manufacturers to go bankrupt and purchase someone like BMW then. But Cathie Wood, she knows what she's talking about. Her ETF has been so successful as of lately. She's had a great track record. People just thought she was insane, calling out such high price targets. Right? Cathie Wood just runs an ETF for growth stocks. There are all sorts of ETFs out there, some for value stocks, some for EVs. It just happens that recently growth stocks have been successful. But the majority of ARK's success has been attributed to one stock, Tesla. No one ever talks about how ARK was flat for 3 years prior. Cathie Wood couldn't predict COVID and the effect that would have on the stock market. There is always luck involved. The market could have equally gone a different direction, and some value investing ETF might have been successful instead. But now, people think Cathie Wood gets it. They invest in her vision, but it only works until it doesn't. Well, very few professional fund managers can even beat the S&P, or even monkeys throwing darts at a stock, despite all their resources and experience. But there are enough of them out there that always one is right, at least for a period of time. You're right until you're wrong. But whilst they're right, it's their job to convince as many people to invest in their fund portfolio as they can, convincing them that they know the future. Fund managers invest in multiple stocks. The more stocks you have, the more it dilutes your knowledge on each stock. Yes, they have analysts looking at stocks, but you don't know what their entire agenda is. They're likely to be bullish on what they follow and will convince the likes of Cathie Wood to invest in them. But then it's her job to work out how credible these others are. There is so much agenda-based advice out there, it's difficult. Obviously, someone is going to tell you it's a great investment if they have $1 billion behind it, as they want people to invest in it. On the other hand, you can equally say that they believe in it so much that they backed it with a lot of their own money. Just like me, I think Tesla is great, and that's why I invested. And I just enjoy talking about it and telling everyone else why I think it's such a great company. If I didn't think it was great, I wouldn't hold any shares in it. And okay, the shorters have money back too, and are prepared to also research Tesla. But they don't get to meet up and interview with Elon Musk. They don't get private tours of the factories. At one stage, there were aerial photos of the Fremont car park, with people counting how many cars were being manufactured. Production hell was a rough period. Imagine a company brand new to mass-producing autos at scale. In retrospect, the chances of Tesla pulling it off were slim. We did get lucky, and we were rewarded as a result. We thought if they can sort out production, then this company will destroy. But here we are again, in a similar scenario, waiting to see if Tesla can achieve mass-level production lines for 4680 batteries. If they can achieve this, then the stock price will run to the next cycle. Well, what about Warren Buffett? He's credible. He has an outstanding track record, but he didn't invest in Tesla. Buffett also stayed out of the dot-com bubble. He sticks to what he knows, which is being an extremely disciplined and patient investor. Except investing environments change. What used to work previously doesn't work forever. Berkshire Hathaway has now amassed massive amounts of cash. The cash is losing purchasing power at a rapid rate through inflation and market increases. Buffett was waiting for his usual bargains. He's a contrarian investor, waiting for the stocks to reach the value that meets his criteria. The problem is, the world has changed. He did, however, manage to get into Apple, not his usual strategy, but that's now become his largest holding. Over the years, I've asked all the credible people I know what they thought about Tesla. For example, my wife's uncle is a well-known economist. He even sat on the board of several public companies. I spoke to him about Tesla, and he just told me all the cliche FUD that you hear in the news. When I actually got to the bottom of it with him, he had no rebuttals left. His son, my wife's cousin, is actually quite high up with JP Morgan. Similar thing, just thought Tesla wouldn't survive. A friend of mine who trades futures for Chevron, the energy oil company, again thought Tesla would fail. However, another one of my wife's cousins who worked for Bailey Gifford, who at one stage had the largest share out of all institutional Tesla investors, he said you just can't go wrong when interest rates are this low, which was a good point. Yes, my wife comes from a very big family. Anyway, you could call all of these people credible, yet none of them really impacted my decision or my conviction. They hadn't done the same research as me. They didn't have the vision. They'd seen it all before. Sometimes experience counts against you. Once you make your decision, trust your analysis. No one can possibly see what you can about the company. No one knows your strategy. But make sure you are being honest with yourself too. Don't just stick yourself in an echo chamber and just deny what anyone disputes you have to say. Listen to them and make sure that what you're saying won't have an impact on your investment, and research it all yourself. Robert Kiyosaki, the famous author from Rich Dad Poor Dad, said he loved investing in property in Vegas and Phoenix. Yet, in the global financial crisis, what two cities crashed the most? There are two requirements for investing in Wall Street. 1, you have to think correctly. 2, you have to think independently. Benjamin Graham. I'm a firm believer of investing in what you know. I used to have an SEO business. My job was to get websites ranking high in Google. So guess what stock I bought in the early 2000s? Google. I love cars and driving. I've been involved in technology my entire career. It's therefore no surprise that I invested in Tesla. But I also had to learn about the company. Being all in on one stock means you can concentrate on that one stock that much more. There are other YouTubers that talk about Tesla, but it's perhaps only 1/5 of their portfolio. They simply can't justify the same amount of time to study one stock. They don't have the same level of skin in the game. And I hope me getting my delivery estimates and Q1 net profits so close was a lesson to you all. Not about how good I am at working at predicting the future, that was still slightly lucky, but about how off professional analysts can be. And just because Wall Street predicting something doesn't mean they're right. I keep saying this, that no one can predict the future of the stock market, not even Warren Buffett or Cathie Wood, and certainly not me. I'm happy to admit that I got lucky with my Tesla stocks too, if you can call it that. There are continually black swan events that will keep coming up in the future that no one can predict. No one knew COVID was going to come, and interest rates would be historically low. And 10 years ago, you couldn't predict governments saying that they will ban all ICE sales in the future. I didn't expect to be up this much on Tesla at this stage. Although the legacy auto competition are still about where I would have expected them, failing miserably. Your gut is your credibility. You are the only credible person to listen to on where to invest your money. Sure, listen to advice from others, but at the end of the day, be confident in what you know and make your own mind up and stick with your conviction. But be honest to yourself too. Look for red flags. Some of the best investments are the ones you don't make. As Buffett says, you don't have to swing at everything. You can wait for your pitch. Thanks for listening. Please hit the thumbs up and don't forget to subscribe.